been a complete free fall for the rupee as it's breached that level of 70 against the US dollar. Let's talk about where it's headed, what's causing this movement as well. Joining in right now is Ananth Narayan, money market expert. Thank you so much for taking time out and joining in. I just want to start off as to, this kind of a move on the currency, what the real catalyst could be. Do you think that largely due to the direct spillover effect of what's going on globally with the Lira, as well as the wider weakness that we're seeing in the euro, is attributing to this movement?
Morning, Avan, and yeah, broadly that's the case. This sharp move that we saw since yesterday was clearly triggered by what happened in the Lira, in South African Rand, Argentina last night, and the broader dollar strength. Having said that, it's clearly a knee-jerk reaction. Nothing has changed in the last 48 hours on a fundamental basis. Having said that, it just underscores the fact that our external balance isn't great, that we've always had vulnerabilities building up over the last 12 to 24 months. And those vulnerabilities are playing out now. Effectively, our current account deficit has been growing over the last few months. And therefore, every month we have a permanent outflow of dollars, which needs to be funded by us borrowing less stable and less permanent money from overseas, which is not a great sustainable balance. So in a sense, this correction that we've seen in the rupee this year is a reflection of the underlying imbalance. And this should help correct that imbalance. 70 is just a number. The good news in all of this is that RBI has plenty of reserves. And therefore, the ability for it to control and ensure it doesn't become a free fall is quite large at the moment.
I like that you say 70 is just a number. It's a fairly treacherous one at that, if I may, Ananth. But the question is, do you think that now there's a danger that this could spiral even further in terms of the levels that the currency is headed, given the fact that, of course, we're talking about this global contagion effect with the Lira? Or do you believe that, as you said, that the RBI will be looking to intervene?
The risks are always there, Avan, and they cannot be denied. For one, there has been an overhang of unhedged positions which have been built up in the country for the last few years. We've had FPI in debt come in, for instance. We still have $60 billion of that remaining. We have NRE deposits. We have exporters who have sold, importers who have not bought. And therefore, the possibility that some of them might panic and come in and start buying is always there and cannot be denied. The other issues, of course, is that our core balance, like I mentioned, is still one of which still looks unsustainable. We still have, too much of imports. Our exports have been tepid. Our FDI has not been great either, and therefore our permanent flows still look negative. Third, the external context. Argentina yesterday was out of syllabus. We don't know which other country is going to blow up next. November, we have the Iran sanctions, which will start to bite, and that will directly impact oil prices and us. So, the global context isn't looking great. If dollar happens to strengthen further, it's only natural to expect the rupee to weaken even further. So the whole host of factors that one has to worry about. But in the medium run, like I mentioned, one, the correction in the rupee and the fact that our overvaluation is reducing should help address our current account over time. It won't happen overnight, but it should happen over time. And second, RBI is there to hopefully prevent a complete meltdown. $400 billion is not a small amount. That's the size of RBI reserves even today. And therefore, they should be there in case there's some kind of a panic to help calm matters.
So where is it that you see the currency headed, given the fact that you're fairly confident that we will see some movement by the RBI?
Look, even today, with all the moves, and yes, 70 is going to be splashed in the white papers tomorrow, rupee is still overvalued in real effective exchange rate terms by about 15%. I mean, it sounds incredible, but that's the case. So can rupee eventually move up to 72, 73? I think it well can. Now, obviously, it hurts us. It hurts our pockets directly. But, if you don't have enough exports and you're importing too much of smartphones and gold and oil, we have very little choice but to adjust our currency rate. So a further gentle depreciation cannot be ruled out. Our rupee is still overvalued. I think what we have to look out for is trade data as it comes in through the next few months. Hopefully, this weaker rupee should help balance out matters a little more. And then, of course, we have to hope and pray hard that the external context remains contained and that oil prices don't add to our existing problems and that Trump and Iran make up and oil prices subside again.
The external context remains contained. We certainly will. But yes, there is a possibility of 72 to 73 versus the greenback. Anand, thanks so much for, putting into perspective the actual reality on ground, as well as what the potential risks are for the currency as well as the Indian economy.